Hey, how's it going, friend? Juan, Pablo here. So we just found a sweet 6 unit. We want to break down the numbers. So let's go ahead and cue in that intro. Then we're going to jump to the screen share. Hey, how's it going, friend? Juan Pablo here. Thank you so much for visiting this channel. On this channel, we like to focus on the 3 pillars to financial freedom, which are personal finance, funding, and real estate investing. And this is the deal of the week. We actually sourced the 6 unit. So we are sharing this with our students first and foremost, but we want to give you guys on YouTube a sneak peek to see the numbers and analysis to let you know what we do in the background. So without further ado, let's go ahead and dive into this topic. All right, so I'm gonna do the screen share. All right, here we go. And by the way, guys, if you can't see the URLs or the property addresses, again, these are students that we prioritize. These are deals I meant to say that we prioritize for our students. So that's the reason why we do this, to keep these things confidential. However, we're going to break down the numbers. Now, we're breaking down the numbers for multifamily properties. Now, I have a video below that shows you a little bit more in depth about multi-unit investing, multifamily investing. So check the link below in the description to learn more. But in this particular video, we want to break down the 6 unit. So this lets you know with the 6 unit here, but the asking price is 289, which is not bad. So if you really think about it, 289,000 divided by 6 units means the cost per door is about 48,000. Okay, so we might want to get this a little bit lower, but the price point is not too bad. And the cash flow per unit is 138 bucks a month. Cash on cash return 14.73%. Sweet. So let's take a look at the listing. So this is a deal we actually found off MLS, which is not bad here. So you see here, the seller wants 289,000. This is in Pittsburgh, by the way. And we have the GAI, that's the gross adjusted income, 49,000. So for the year, this property produces $49,000 in income. So I'm just rounding these numbers off. And the NOI, so the NOI is pretty much the GAI minus the expenses. So even though they didn't itemize the expenses here, you see the insurance, utilities, they're all blank, the maintenance, other expenses, all blank. But you can see here the NOI is far less. So we see, if we do the math, 49,000 minus 30,000 is about 19,000 in regard to expenses. Okay, so we can just do an estimate there. But once we get this deal on the contract, of course, we want these expenses to be itemized out. But we can do some quick math here. So we're just doing a quick analysis. Okay, so we see here the NOI is 30,000, and we see all the rents here for the 6 unit. So it looks pretty sweet here. We see some information about this deal, about who's responsible for utilities and so forth. So the property is not bad. So what we do is we take the numbers from the listing and we want to put them in our deal analyzer. What we like to do is take 2 scenarios. Scenario A, we like to look at how it's currently performing. And scenario B is how it could perform if we add some value to the property, such as increase the rents, decrease the expenses, and so forth. So scenario A, the current performance, we enter the rents here, we enter the expenses, potentially what it could be worth, the NOI. So we see here, the cash flow is about 9,900. Monthly cash flow is 828. Cash on cash return 14.73. Now in scenario B, we've noticed that the units are somewhat under-rented. The current monthly rents are $37.82. We checked public assistance. We can receive up to $5,100. We love public assistance. Why? Guarantee money on the first. That's pretty much the reason why. Okay. But let's say all other things stay the same. I'm just dropping down to the bottom. But we see here the cash flow can greatly increase if we do these rent increases, to the point you're going from $828 a month of cash flow to $1,877 a month in cash flow. So almost, or I guess a little bit over $1,000 more a month in cash flow by doing these rent increases, and practically more than doubling your return on your investment. All right, that's pretty sweet. So I have a video below if you're interested in learning more of how you can get started in real estate investing, especially investing in markets that are safe, affordable, and produce decent returns. Then make sure you check the link below in the description, because we'll love to share with you how we invest out of state, as well as how we invest out of state using creative financing. All right, guys, as always, this is to your success. Continue to earn passively, live passionately. Peace.